Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Emirates Airline has announced that it is to start a daily passenger service to Kabul, Afghanistan from the 4th of December this year. According to news agency WAM, the daily flight to Afghanistan's capital city will be the first destination in the country that Emirates has served. The route will be operated by an Airbus A340-500, offering 12 first class, 42 business class, and 204 economy class seats. Officials were quoted as saying that they expect the flight to be particularly popular with corporate business travellers, as well as Afghan nationals returning home to visit friends and family. It will also present a new opportunity for cargo operations to the country, particularly for the shipment of pharmaceuticals, perishable foodstuffs, and construction materials. And additionally, Etihad Airways has further increased its flights to Pakistan's capital city of Islamabad from 9 to 11 per week. Etihad Airways will now offer 31 weekly flights from 4 destinations in Pakistan, which along with Islamabad include Karachi, Lahore and Peshawar. The airline has also unveiled new timings for its daily service between Sao Paulo and Abu Dhabi. From the 27th of October to the 19th of December, flights will depart from the Brazilian city at 7:15 p.m. Brazilian local time. And from the 20th of December onwards, flights will depart at 11:15 p.m. The future of banking in the MENA region is technology-led. That's according to experts at this year's Sibos Dubai. Research company Celent says banks are expected to spend an estimated $180 billion on IT this year. At present, cloud is only a fraction of this, but by 2015, spending on private, public and hybrid cloud solutions is placed at $26 billion. Experts say the region's banking and finance industry is undergoing a significant transformation, driven by economic growth, increasing customer demand, localization and globalization. Sam Alcarat, the managing director of SAP, says these are exciting times for the region, as well as the industry. Banks such as Emirates NBD are among those adapting rapidly and incorporating technology into their products and services.
We could maintain the relationship with the customer even more. We could see even the customer engagement has happened more and more with the bank in terms of number of transactions growing with him. The trust is even building more and more between us and our clients.
The FSI industry is a very IT-savvy industry. And therefore, you see the waves of the in-memory computing aspect, the cloud applications that are now rolling out from the virtualized data centers to disaster recovery data centers all the way into the software as a service. That is now rolling out in the Middle East, and you start to see the tipping point coming to be very close in the next year or two. We're going to start to see a very robust growth in the cloud applications. You know, IDC says it's going to be a 40%, over 43% year-on-year compound for the next several years. And then finally, on the mobility side, SAP is leading the world in that, delivering secure enterprise-grade mobile apps as a platform to our customers, thereby allowing them to co-innovate with their customers and deliver that day in and day out to their clients.
In addition, SAP say they are also responding to the strain on local talent and resources, which are a part of the growing pains. In addition to the sessions at Sibos, which highlight the industry's best practices, it also boasts the InnoTribe Museum, which highlights the latest in technology and applications. By empowering clients with capacity building and technology, organisers say these will help the players in the industry increase their efficiencies and improve their operations.
from our perspective, there are two aspects. There is the messaging, where we've seen growth for the last 5 years of 10%, and maybe a bit of a decline because of the Arab crisis here in the region. But on the other side, on the services part, everything related to cloud services, everything related to consultancy, this is we have a major increase. The banks are looking forward, for automation, integration with their system, and so on. So this is really growing, and again, there is a lot of potential. There are many banks here, many financial institutions, so big opportunities. And today in the region, we have more than, when we opened the office in 2007, we had barely 1 or 2 corporates connected. Today we have more than 50 of them. So they really find value in using SWIFT. The same thing happened, for example, to exchange houses, which are very particular to the Gulf countries, remitting money back to the region. Those institutions were using also, email, fax, internet, to send remittance information back to, Asia, Bangladesh, Pakistan, Philippines, and so on. Today they are using SWIFT. Today we have more than 60 exchange houses. The largest one are using SWIFT, so they can use a secure, standardized way to send information to their correspondent bank.
We have launched the SAP Training and Development Institute about 1.5 years ago now, and we have trained well over 120 Emiratis, Saudis, Bahrainis, Omanis, etc. So we're just focused on the local talent, and we're taking these young professionals right out of university with less than 2 years or 1 year experience right into a SAP 3.5 to 4 months intensive program, and then they graduate with certification as SAP consultants, and then we take them back out into the SAP workforce, to the consulting workforce, our partners, and certainly our customers. And what we're seeing is that both our customers and our partners are sponsoring the program, and they're turbo boosting it now, and we see a lot more demand in that program.
The Nasdaq Dubai is set to see its first new listing in over 5 years. That's according to recent reports, with the Bank of London and the Middle East, the largest Islamic bank in Europe, to list its shares on the exchange next month. Humphrey Percy, the BLME chief executive, was quoted as saying that the bank has looked at a listing on London's alternative investment market, but had been deterred by its lack of liquidity and absence of recent new listings. He also revealed that the bank has 1.4 billion dirhams in capital, enough to last for 2 to 3 years. The listing price will be $2.57 per share. Officials added that a main reason for the listing is that the Nasdaq Dubai has taken steps to make listings easier, more transparent, and more dynamic.